Hello friends, I've spotted an excellent trading opportunity and I'm going to share it with you. I will enter the trade quickly to ensure I don't miss the opportunity. To set up the trade, I first use the ATR to determine how far the price can move. I'm setting the TP at 3 because there's good liquidity here, and the higher time frames still show an uptrend, so it's better to exit the trade in these areas. The market hasn't yet cleared liquidity from this zone, but it's wise to enter now as it might not reach back. However, the stop loss is a bit high, so I'll adjust it slightly lower. That's better now, since there's also liquidity in these areas that might halt the market's downward movement. I've placed the stop loss slightly above this ceiling because the market might grab liquidity above this level, potentially triggering the stop loss unnecessarily. As you can see, the TP is well positioned in a favorable area. I'm entering a sell trade and waiting for the price movement. Here are my reasons for entering this trade. As you can see, yesterday gold experienced very weak movement along with a deep tiring correction. At the end of the day, the price ranged before moving upward, creating a BOS in this area and in higher time frames. However, since the price immediately ranged again without continuing its movement, I believe this area will be lost and the price will return. Also, because yesterday's corrective movement was very deep, indicating weakness in the uptrend, it corrected more than 80% of the previous wave. It's 2:50 and the London session opens in 10 minutes, which might trigger a downward movement. Good engulfing and pin bar candles have formed before the London session, collecting liquidity from these areas. The liquidity from this FVG and above this range might be enough for the market to start a downward move. If a strong downward move starts and I see good signals, I'll definitely increase my risk. In the 1-minute time frame, the equilibrium area is here, and as you can see, the price has penetrated above it and continues its upward movement. If the price can't stay above this area during the London session, I'm confident that the New York session will also be bearish, driving the price further down. As you can see, good pin bar candles have been identified in the 5-minute time frame by the CPF indicator, highlighting the significance of this price area. The London session has just opened, and the price finds itself in a strong resistance zone that might attract entry from large traders. Hence, I'm opening another sell trade with a smaller reward. Gradually, as you can see, it's becoming more apparent that a downtrend is forming, and to seize the opportunity, I'm risking an additional % and opening another sell trade to conclude during the London session. In the 5-minute time frame, the trend is still ranging, with no sign of a downtrend in this time frame. The last low indicated by the main structure is here, while the internal structure shows this low. Generally, for a downtrend to form, either this low must break downwards or this high must break upwards, but everything is currently in a range. From the 15-minute time frame analysis, I indicated how the formation of a range following the BOS shows weakness in price, suggesting this BOS is not reliable for a buy entry, and I think price will return within it. Everything is exposed, clearly showing the market is gathering liquidity to start a downtrend. I would like to open another sell trade, but my maximum daily risk is 3%, which means even on a great day, I won't risk more than 3% even if more conditions are met. We analyze probabilities in the market, and at any moment we might misread the trend, so always leave room for adjustments. I have 3 open trades that I need to manage because too many might dwindle my focus and lead to hasty decisions. Here is how I see the scenario. From 2 to 3 a.m. New York time, a false upward move formed to push the price into this order block zone, completing previous sell orders. After the London market opens, new sell orders can be placed in suitable price ranges to start the downtrend. I always emphasize, regardless of where pin bar candles form on the chart, take them seriously. The CPF indicator settings for identifying pin bars remain default. I've made no changes. As discussed in other videos, whether a pin bar candle is bullish or bearish, its formation signifies the significance of its price area, and it deserves attention, potentially becoming important in the future. Examining the internal market order blocks shows a good bearish order block forming here, which might indicate a continuation of the downtrend. As you can see, after forming the order block, the price immediately returned inside it and activated more sell orders, gathering necessary liquidity for a downward move. The price dropped slightly, and to investigate potential reversal points, I'm highlighting FVG areas for further examination. This unmitigated FVG could cause an upward price reaction, but I don't think it will push the price back to activate my stop losses. If the FVG doesn't hinder the downward move, I can confidently say our TPs will be reached. As I stated earlier, if a BOS forms after a flip, it could indicate the correctness of our trend assessment and potentially lead to new bearish BOS formations. However, all these are probabilities with no certainties in the market. As mentioned, this unmitigated FVG area matters to me, and I want it marked on the chart, so I'm copying it to ensure it isn't removed when disabling FVGs. I'll delete comments in the section to preserve the copied box. If I take note of a strong price reaction in this area, I might close some of my trades. As anticipated, the FVG weakened the price trend, and now we need to see if the price can climb above the equilibrium area. The price failed to break above the equilibrium area, reversing with a bearish engulfing candle. The price is now nearing the TP, so I'll secure all my trades. As anticipated, this BOS initiated a downward move, resulting in subsequent BOS formations. To keep the video from extending, I'll adjust the TP of the third trade for quicker execution. Okay, all 3 trades have reached their TPs. The London session started at this price point, where I predicted a potential downtrend initiation. In the order block area identified by the Smart Money indicator, I executed sell trades in phases and managed them until the TP was reached. I hope this video helps you make better use of these indicators. Good luck and win.